They say history repeats itself. I say we shouldn't trust horny college grads with little to no experience and billions of other people's money at stake to run a company. But how could something bad happen with this cool new crypto firm led by the golden boy, Sam Bankman Fried, who's only trying to get as rich as he possibly can so he can give it all away to charity? FTX was massive and they had to have been making billions if they've got the Miami Heat stadium's naming rights and the TB12 method in their pocket, while also spending $300 million on Bahamas real estate vacation homes for their executives' polyamorous sex parties. I'm sure you already know about Sam and the beautiful minds at FTX, or maybe you know him as the most generous billionaire that publicly pledged to donate all of his $27 billion to charity. Either way, this mega villain Ethan Klein lookalike conned a lot of people and managed to put up Enron numbers in the process.
Hi, my name is Sam, and this is my story.
The analysts here at CJ Capital Management were pretty upset we didn't get an invite to the Bahamas sex parties, so we have put together this video to laugh at FTX and hopefully inform investors so nothing like this slips through the cracks again. So how did the genius young billionaire phenom make it to the top in the first place? Sam founded Alameda Research back in 2017 with some finance college buddies of his. The only real success they came across was some Bitcoin arbitrage opportunities where they bought Bitcoin for cheap in the US and sold them on a Japanese market for profit. This led to about $20 million in profit, but was only the start of their crypto fun, as Sam would later create FTX, a spin-off of Alameda, which would be a crypto futures exchange. Sam and the brainiacs at FTX would go on to create FTT, or the FTX token. Creating a crypto coin inherently isn't a bad thing, but literally anyone can create one and pay Jake Paul to pump it to all 4 of his fans and just take all their money.
The token was created to benefit users of the exchange with greater centralized stability, lower transaction fees, and increased exposure. The main focus for Sam, however, was its use in generating value for the company. If a bunch of people bought the coin, or if he pumped it up, the price would obviously go up, and then Sam could recognize that higher value of the coin and claim it as an asset to boost their balance sheet, which is a huge gray area due to the ease of price manipulation with cryptocurrencies.
FTX customers were really incentivized to hold these tokens, as holders could execute trades at a discount and the tokens could be used as collateral, essentially giving an advantage to any investors unfamiliar with Bernie Madoff. The scum at FTX knew that if they held the majority of the tokens, they could just determine the price to be whatever they want and value their company based off these estimates. Without consent or knowledge from FTT investors, the money that was put into the coin was pulled out and transferred to Alameda and pumped back into the coin to just absolutely leverage the out of it. They valued their company off their fake FTT numbers, which created a fat equity number on their balance sheet and convinced a lot of rich people to give this man a lot more money than he should have his hands on, being that the only money he should be worrying about is whether to spend his commissary on ramen or chips. At one point in time, Sam was the face of young entrepreneurs and seemingly could do no wrong. He was the youngest crypto billionaire that just wanted to get rich to donate all of his fortunes to charity, besides the $300 million in Bahamas vacation homes. The name FTX was everywhere. He was using the fake valuations to get piles of investments so he could just start buying every new crypto company like he thought the industry was profitable, and spend a ton of money on advertising with ties to TB12, Chef Curry, DJ Diesel, and Corday's Girl, not to mention the naming rights of the Miami Heat stadium. They had their logo on jerseys, and Sam was the golden boy of the crypto entrepreneurs. Sam, however, made one major mistake. For some of the acquisitions, he purchased shares with the FTT token, and since it was so leveraged and their trading volumes were low, it left them really vulnerable in the case that even a minor portion of their customers wanted to withdraw their funds. All it took was for one domino to fall, and it was a matter of seconds before the last one came crashing down.
And that's exactly what happened on November 6th, when Changpeng Zhao, founder and CEO of Binance, whipped out his elephant trunk and announced they were not going to help out FTX's liquidity crisis. Sam was scrounging for cash, and Binance had originally offered to help them out with their liquidity issues, as Sam said that customers had demanded withdrawals to the tune of $6 billion. Sam was also tweeting all about how they had the assets to pay customers, but would go on to delete those tweets later. Zhao and his team went on to do a little further research and reconsidered their investment after finding mishandled customer funds and alleged US agency investigations. Now, the genius golden boy Sam had decided to use his tokens as collateral when he originally acquired some of Binance, which meant Zhao had a lot of these shitcoins that were worth way too much. One press of the button would send a nuke down on Sam's already falling house of cards.
Alameda's CEO Caroline Ellison tried to buy all the tokens back for $22 each, which many think was the number they needed to remain solvent. But Zhao had plans of sending them to the dirt, and that's exactly what he did.
November 8th was the day he sold his shares of FTX's coin, and the price spiked down quickly and sparked the beginning of the end. Their largest vulnerability was their downfall, and all Sam could do was watch the number fall. Between that Monday and Tuesday, FTX's FTT coin had lost over 80% of its value, plummeting down to a cool $5 while clearing out over $2 billion. The next day, the price dropped by over 50% again, sitting at $2.30. On November 11th, Sam stepped down as CEO and handed over his dirt pile to some bankruptcy lawyers.
The bankruptcy pros currently managing FTX showed that FTX and Alameda posted a combined net loss of $3.7 billion. But nobody knows how much of that $3.7 billion was ever actually real in the first place, thanks to their coin being so leveraged even Wall Street Bets was concerned. All the execs, including Sam, stepped down, but some clowns like Kevin O'Leary still back this dude, and I guess you kind of have to as a brand ambassador. But at some point, this footage is just going straight to Mr. Wonderful's villain mixtape.
Don't worry though, public opinion is not on the side of Sam. We did a poll over on the public app to get a gauge from our audience to see what people's opinions were, and they did not fail to disappoint. Most people already have their popcorn ready and just waiting for this court case to happen. Special thanks to everyone who shared their opinion: Razorback, Chris, Lucas, and John. We do polls all the time over there for future videos, so go check us out. And if you use the code in the description, we'll both get some free stocks.
Now, if you thought Sam was just an executive who was looking at the long-term picture and not focused on current financials, then you might not know about one of his favorite hobbies, which included telling journalists just how profitable FTX was. He told Forbes he made $1 billion in 2020. He leaked some docs in 2021 saying they made $388 million. Earlier this year, he said in multiple Bloomberg articles that FTX was profitable, and he even told LeBron that Kobe would score 81 points in that game. The scariest part of this whole thing is the amount of legit rich people that Sam had in his pocket.
Some of his largest investors were SoftBank, Tiger Global, Thoma Bravo, Sequoia, BlackRock, and Paradigm. And these aren't just your small-town investment firms. BlackRock reported in 2021 that they had $152 billion in total assets with over $5.9 billion in net income. BlackRock's iShares blockchain and tech ETF dropped over 7% on the 9th as they were heavily invested in FTX. The current leadership at FTX claims that they owe creditors over $3 billion. But I just want to know how Sam actually convinced these companies. It must have been the Chef Curry signing, because the greatest shooter of all time could be trying to sell me some essential oils, and I would probably buy some.
Because he recognized the FTT coin on their balance sheet, he was able to change the number to whatever he wanted, so he could just skyrocket their valuation without a cent actually getting invested. In July 2022, he was able to raise $900 million off their $18 billion valuation. And less than a year later, they were getting more money with a $32 billion valuation. I understand old man Brady fallen victim to the Prince of Nigeria scam, but real Wall Street billion-dollar hedge funds had stakes in FTX. Sam wanted to be known as the most generous billionaire in the world, publicly pledging to use his large and growing amount of wealth to help prevent nuclear war and stop future pandemics, while at the time having only donated $25 million or 0.1% of his wealth, making him the least charitable person on the Forbes 400 list. Now, I understand what I look like here, calling out a dude for only donating $25 million while I might never breathe near that amount of money, but I just wanted to show how sketchy this dude's word was. He paid a bunch of journalists to write stories about him being the most generous billionaire, while he was actually the least generous billionaire. He made promises to fund research and other philanthropic ventures with his future fund, and did pay them, but left many concerned on whether or not the money's legit or if it's stolen from investors' funds. Kevin Esvelt, an evolutionary engineer at MIT, works on the safe advancement of biotechnology, which includes the prevention of deliberate pandemics. He filled out Sam's philanthropic future fund application and got a response in less than 2 weeks, giving him $1.2 million. Now he says he's searching for alternate funding. Using the Futures Fund prize, only to pay employees' salaries since he doesn't think they should lose their jobs because of someone else's mistakes. He's setting the rest of the money aside until he knows more about where it came from and whether it might be taken back, as FTX's lawyers claim that a substantial amount of assets were missing and possibly stolen. Hard to steal assets when they don't exist in the first place.
Now, Kevin was not in the minority, as the Future Fund gave out over $160 million in grants, with some people not even receiving the money they were promised. But the people that did said that they accepted due to FTX's high-profile advertisements and sponsorships, but now are trying to figure out how to give the money back as they feel guilty or believe that the lawyers are going to need it back, basically.
It's just so sad to see people that are actually making a positive impact on the world getting f***ed over because of some greedy, spoiled kids. Looking back, you can see how all of it is just a big act in order to cover up all the skeletons in the closet, but hindsight is 20/20. Most of the execs that Sam hired had lived with him in his Bahamas houses and didn't really have any crypto or let alone executive experience. One of his employees that lived at his place, George Lerner, told Vice that part of his job was finding dating options for Sam, even asking another crypto entrepreneur, Avedisian, if she wanted to pursue a romantic relationship with Sam. Bro was really sending his friend over to the girls' table at lunch asking if she wanted to hug him behind the playground at recess. It was weird enough they were all living together, but Avedisian also said that the team was all weirdly intermingled, which many attribute to the large rumors of their polyamorous lifestyle. A sex symbol and the most generous billionaire ever? It'll be easier for people to look past all those fake numbers on the balance sheet, right? And check out this apology. It seems so genuine I can feel the teardrops hitting his phone screen. It genuinely seems like Sam watched a Bernie Madoff documentary and a Jake Paul crypto promotion scam, and then paid a bunch of media companies to pretend like he was a genuine dude. He wasn't in the game to mess around. He put up Enron numbers and all that's left is to hang his jersey up in the rafters. If there's a conman Hall of Fame, Sam Bankman Fried is a first ballot unanimous pick.
Seriously though, hopefully this can be a learning lesson for the crypto industry and can potentially lead to better self-regulation and more transparency. Hopefully companies will do more research into who's trying to put their name on their jersey or arena, as giving someone an outlet like that gives them so much reputation. Most of the crypto assets that these companies hold are unregulated, and anyone with an internet access and YouTube can figure out how to create and pump them. There's a lot of good in the community though, and I don't think this one event should turn you away from the industry as a whole, but please do more research into what shitcoin you're putting your paycheck into. Even the biggest can fall, so don't put your money anywhere unless you know exactly what it's going into.
Thanks for checking out the video. I'm trying a new format today, so let me know if you enjoyed it. I've been putting work into this channel and I already got a few more videos lined up, so I'd really appreciate it if you liked and subscribed. I'll see you around.